Hi, my name's Adam. Thanks for joining us today. Today in week 5 of our mini-series, we're going to talk about net worth. And I'm going to give my personal opinion on tracking net worth, why to do it, how to do it, and in some strategies and some things that you read. If you Google, track net worth on Google, there's a lot of stuff that you're going to come across, and a lot of it I don't totally agree with. So I'm going to go through that in this video. So tracking your net worth is super simple. Basically, get a spreadsheet, and I've actually linked a spreadsheet that we use for our clients below. So you can click on that. It's super simple. It's an Excel-based spreadsheet that you can fill out. Basically, list all of your assets, list all of your liabilities and debts, and it's going to come up with a number at the bottom. Hopefully, it's a positive number, but it may be a negative number. But get a number. That's all we're going after now is figure out what your net worth is, whether it's negative 100,000 or plus 5 million. It doesn't really matter. That's your starting point. Every single month, I want you to start tracking all your assets, all your liabilities. The reason we want to track this is we want to know the starting point. And again, I don't care where your starting point is. We just want the future to be positive or, growth from where you currently are. That's all we're focusing on when we track net worth. So as you start tracking your assets and liabilities month after month, you're going to get a good idea on where assets are growing, where they're maybe not growing. Also your debts, like are you actually paying off your debts? Are you reducing your debt exposure? And we want that end number at the bottom, your net worth number, to be consistently going up. Maybe not month to month because fluctuation in stock markets and different things, but year over year, we want to start tracking that and making sure that it's moving in a positive direction. The reason why net worth is so important is because it's kind of the sum of your financial life. Like if you actually fill out a net worth statement, you're basically putting all your financial eggs onto that piece of paper. Now, when you fill out your net worth report, I will say, don't include everything. And what I mean by that is you don't need to put all your jewelry unless there's substantial worth there. Your shoes and your clothes and then this and that. Any asset that's maybe over about $1,500 or $2,500, make sure is included in your net worth statement. So vehicles and all that. Again, vehicle is an asset. For a lot of you, it's probably also on the debt column, unfortunately, too. So just make sure that you list any asset over about $2,500 and any debt at all, regardless of size. So even if it's under $2,500, I want all your debts listed because that's really going to be something that you need to focus on your net worth statement. Now, like I said, it's important to track your net worth on a monthly basis. Okay, that's going to give you a nice consistent flow over time. Again, it could be a little up and down, but we want consistently up. Now, I really want you to focus going forward on annual reviews. Okay, you want your net worth to continue to go up year over year over year. So make sure that this is something that you become diligent on. It's great to track it monthly, and I get after a while that may get cumbersome. Track it every quarter if you have to. Do whatever works for you to make sure that you don't slip off this train. I want you to be tracking your net worth to making sure that you know your starting point. You can set some goals from there based off your cash flow, family plan, retirement plan, all of that. But if you know your starting point and know where you need to go, then you can actually track that line as you get to your end goal. Again, if you don't have a starting point, it's hard to set goals in the future. So your net worth is going to give you a bit of a starting point along with your budget. Now, on your net worth statement, obviously one of the bigger assets, probably the biggest asset for a lot of you, is going to be your house. And like I've said in other videos, if you own a house in Toronto, Vancouver, some of the major cities in Canada or even in the US, that's going to really drive up your net worth over the last 2, 3, 5 years. And that's fine. So here's one fallacy that I read all the time on the internet that I just don't agree with. The concept of coming up with a calculation to figure out if your net worth is on track for your age and income and all that. Well, the reality is if you live in Vancouver versus maybe Hope or Chilliwack, or if you live in Toronto versus maybe, greater Toronto area, well, your net worth could change and fluctuate. So you may have a $2 million net worth if you live in downtown Vancouver, but only $1 million net worth if you live, an hour and a half outside of Vancouver, but you're in a better financial position with a lower net worth being outside of Vancouver because you don't need as much to buy a house and live and all that kind of stuff. So, calculating a percentage of your age and income and all that, there's many formulas on the internet that you can Google that I just don't agree with. So track your net worth and track it towards your goals. So set some goals and track it towards your goals versus figuring out, hey, I'm 40 years old and I make this much money and my spouse is this old and I want to retire here. Here's what my net worth would be. Because really it's going to depend on how your net worth sits, i.e., is it in investments for retirement? Is it in your home? And also where you live and kind of the cost of living where you currently reside. The second part I want you to focus on in your net worth statement is where your net worth or where your assets actually lie. So again, I've mentioned this in other videos, but a lot of us sit on a lot of assets in our house and very little in retirement savings. And that can create a bit of an issue down the road when it comes time to actually retire and start drawing in income. Okay, you could be worth $10 million, but if you're sitting in a $10 million house with zero retirement assets, that could be a problem. Either you're gonna have to sell, downsize your house, take some of that cash and start living off it, do a reverse mortgage and that kind of thing. So at some point you have to take a step back from your net worth statement and actually see where the assets lie to make sure that we can actually drive an income out of your current net worth, out of your assets and that kind of thing. So make sure to focus, as you move forward to kind of, break out those asset pieces. I was talking to a client on the phone today and he was saying, look, like, Adam, we've done very well. We have a bunch of assets. We're in our early 40s. Like, we're sitting in a good position, but I want to make sure that we don't have everything in one pile. And what he meant by that is, they have personal assets, they have corporate assets, they have some rental properties. Like, how do we kind of manage this to make sure that when we hit retirement and we want to retire early, that we can actually draw an income, we're not paying too much tax and all that kind of stuff. So there's strategy behind it all. But for most people, when they look at their net worth statement, focus on your assets and where they sit. Do you have enough money, cash, that you can actually draw an income from at the point when you retire? And if not, you might want to create a strategy with your financial planner to make sure that you can actually start drawing an income out of your net worth down the road when you plan to retire. My personal opinion is tracking your net worth is super simple to do. It's easier than budgeting and most other things, and it can have a really big impact on your financial future. And the reason for that is because if it can give you a clear picture on where you're at today versus, again, tracking in a year, 2, 3, 4 years, you can see the growth, you can see where your assets are building. Again, if your house, if your net worth is going up in value, but it's only from your house and you haven't been able to save extra money, maybe you need to revisit your budget and see where you can free up some free cash flow. So focus on that. But tracking your net worth is super simple, but it's something that 99% of you are not doing. And I can guarantee you, if you start tracking your net worth, you're going to have more net worth down the road. It's just the data's behind it, the facts are behind it, and I challenge you to start tracking your net worth and see where you sit in 3 years, because I guarantee you, you're going to be in a much better position and you're going to have a clear understanding on where your net worth came from, where you've been able to save and build assets, and also pay off your debt along the way. So thanks so much for joining us today. Again, the link below to our net worth tracker is there. You can use that or Google. There's tons out there on the internet. Find something that works for you. Super simple to use. Again, our spreadsheet's very simple to use, so that's why we like it. We don't like to overcomplicate this process. We will also put in a chart, so it'll track it. Sometimes numbers are great, but sometimes we like to see a chart, one that goes up over time. So we'll throw that in there as well. So if you download the our net worth tracker, it'll have that in there as well, so you can get more of a visual on your net worth over the years. So again, thanks for joining us today. If you enjoy these videos, make sure to hit the thumbs up. And if you aren't subscribed to the channel, make sure to hit the subscribe channel and the notification bell. We release 2 new videos every week on financial, retirement, estate, and tax planning. Thanks so much for joining us. Have a great day.